Hi traders, I want to show you an example of a bearish butterfly pattern that's set up on a 5-minute chart. This is the euro yen. And remember, the first thing we want to do is we want to identify those higher time frame key areas of support or resistance. So just having a quick look at the overall environment here, we have a very strong uptrend. Okay, we've got higher highs, higher lows. Prices come down. You see it's sort of tested this area of resistance, and we've started to rally. Okay, but I'll show you the area of resistance we actually stalled from. Here again, we just take this wick away here. We've got this area on the left hand side here, the spike low. See, we have resistance, this area right here. If we zoom this up, see this rejection. Okay, that is support. Okay, resistance, big move down, spike up, come back through, and you can see you come back and reject. Alright, so if we have a look at this area here on a smaller time frame, I'm going to show you where this pattern set up. You just have a look at this rejection. So we have a nice sell off here. If we draw our fibs from the high down to this low, okay, just have a look at this area. We take our horizontal line, just drop it from the high, work our way down. You see this 70.7 level here? Okay, right in here. If we just zoom this up, just have a look at this area. We've got very nice resistance. Look at the wicks here. Resistance comes back up, taps that level, nice reaction, resistance. We spike through, spike through, spike through. So understand that anyone selling here is going to have stop losses above this high. Okay, and anyone that's looking to break out is going to put buy orders above here. So the essence of this, basically the way I was looking to take this trade was, and I'll show you on the smaller time frame where it's set up, I was looking for a spike above the high to pick up orders. Okay, because what happens is you have your breakout traders, amateur traders chasing price, looking for breakouts above these highs. Okay, and what happens is when the order flow comes in, the sell orders stacked above this level push price lower. Okay, the buy traders then bail. Okay, so the buyers bail on their orders. In order for a buyer to close the position, they have to sell their position. Okay, which then increases the selling pressure. So this key area of resistance is what I was looking for. You can see prices, you know, overall we were in a big uptrend on the daily chart, then we rejected heavily, we've rallied, and you can see we're basically sitting in this range. Okay, having good few goes here. So if we now move over to the, actually let's show you the hourly chart on the day, you can see what I mean by this area rejecting. Okay, rejection up here, here. See our price spikes higher, filling orders around this area, a lot of rejection. And the other thing that you also want to keep in mind here is, you know, if you're going to take orders or sells around this area, just make sure that you understand where you are in the larger picture. You can see in terms of selling pressure, each time we come up to this area, we're rejecting just a little bit less each time. So you see here, we reject, rally back up, reject a little bit less, rally this time pushing higher, more orders above the level, reject. And have a look at the higher highs, higher lows. So this trade that's set up was pretty high risk in terms of the overall picture. You can see we sort of building this ascending triangle. Okay, so it's starting to pressure the level. But as I said, if you just understand the flows and the environment, you can still get some decent trading opportunities. Alright, so as I said, this pattern set up on a 5-minute chart, and the nice thing with these patterns, once you get good at spotting them, okay, I just want to get rid of this eclipse, you'll actually be able to see the pattern a lot easier in real time. Okay, so although, you know, it looks a little bit squiggly all over the place here, you see how we've hit this key area of resistance, we've dropped down, find a level of support here, and then we've rallied, and then we start to reject. Okay, so you want to start thinking about possibilities of a butterfly pattern, and we draw our fibs on here. You see this swing high down to this low, prices rallied up to the 79 level, just shy, literally 68. It's pretty much the same on here. Okay, the feed on this 5-minute chart is not very clean. You can see the candles are a little bit on the messy side, okay, but in real time it looks a lot smoother. So price drops, it then rallies up to the 79, and then it starts to drop off like this. Okay, once you start getting this drop off like this, you want to start looking for the possibility of a butterfly pattern. So we draw our swing from the low up to this high. Okay, show you where this completes. You see this 127 with a 1618. It's basically the same number. Okay, let's just highlight this. If we measure the 127, we're in at 77, and the 618 is 76. Okay, so it's only a pip difference, and if we just put a line at this 127 here, that's where we're looking at the completion point of this pattern. I'm just going to go to the hourly chart and just show you that completion. So you see how we've got that resistance area, and you see how we've got the completion of that butterfly above the highs here. Okay, now as I said, the reasoning behind taking or even considering this trade is understanding the order flow dynamics, okay, where the stops are like to be placed and institutional flows looking to come in above these highs. Okay, remember, they need liquidity, okay, and the stop losses are going to be sitting above here. So people like to sort of hunt those stop losses and then use that liquidity to position themselves, okay, in the right manner. So just go back to the 5-minute chart quickly, and if I zoom this up, so it's really messy on this chart. So you're looking, I'll just step this forward a little bit, you're looking for a sell right up here. Okay, remember your stop loss goes just above the 1618. So if you have a look at this, it's like 7 pips. Okay, and you want to take into account the spread. Okay, so when you're selling with very small patterns like this, make sure you're adding the spread to that area. So if we have a look at the actual number, we look at a sell at 76, 1 pip below that projection or extension, and then we look at a stop loss. See, yes, the 1618 is at 82, so we're 83 plus a spread, so we're looking at 86, a 3 pip spread on this platform. So we just key that into our terminal. Sell limit at 108 spot 76, okay, and a stop loss 10 pips above that at 86. So literally very small pattern, very small stop loss, and I'll place that in there. Now in terms of taking profits, let's just go and have a look at the hourly chart. We've got this trend line in here. Okay, price is moving up, higher highs, higher lows. So this area, if we're looking to sell up here, good place to look to potentially take profits. Okay, the market, the price is really choppy here. You can also take a horizontal line and just sort of work it way into sort of the middle of this pattern, and you can see kind of around this level. It's really choppy, so it's difficult to sort of pinpoint it. But see, we have resistance here, resistance, spikes through, comes back, spikes through, resistance, hold a support, spikes through, back to support. So around that area, we've got a low here. You can see this level support in here, resistance, support, resistance. So around at 108 to 1 sort of 23. We've also got this upsloping trend line. Okay, so if we look at selling at 76, we could look at a target down here around 108.30. So we're around, let's call it 40 pips with a spread for a risk of 10. Okay, if we just go over to that 5-minute chart, just step this forward. Okay, so time of day, this has happened sort of Asian session when this formed. and I'll just step this forward because there wasn't really much that happened. I took this trade live, and you'll see it actually started to fill. It filled during the start of London here, okay? I think, well, just before London. So there's the fall, the spike up. See, our price gradually starts to grind higher here, okay? See this little channel that it builds. Okay, so price coming up, tapping that top end of the channel into the actual completion point of the butterfly. Okay, so if we had to label this, this would be X, this would be A, this would be B, this would be C, and here's your completion point at D. Okay, so that's where we want to sell, and we just step this forward a little bit. You see the first problematic area we have is this level right here, so we just drop this down. Okay, got this area here, we want to micromanage this a little bit. See, a price hits this area of support, actually comes off this little block here, a little bounce. So we'd like to see a price stay below the high here. Okay, so now we're starting to break down. See, our price comes back, retest this area. So now you'd like to see some selling coming in if this level is likely to hold. So popping down a little bit here. Okay, so there we've had a really nice release. Okay, we've taken out some orders in here, having a run down at these lows in here. Okay, so I just want to actually get rid of these fibs quickly. And if we just have a look at the hourly chart, let's just have a look to see what's going on there. So prices, see that spike up? Okay, this is what you're looking for if you're looking to trade these patterns at these sort of highs of the resistance. Okay, so you're looking to get in just above. Okay, this is where the institutional flows come in. Now price is moving down, and we've got a block here. You see this level in here, referencing this area right here. It would be around 20 odd pips or something like that. If we move over to the 5-minute chart. Okay, so what I want to do, you can see it's actually hit this little block here. What I'd like to do is, sorry, I just want to go back to the hourly, is look to take some profits around this area here, and then look for a move down to this trend line. Okay, remember we've got a very big uptrend on the daily, and this is a 5-minute pattern, so just make sure you're not looking for a massive home run. Okay, I'll just step this forward here. Okay, so as prices spike down here, what I want to do is take part of the position off here. Okay, as I said, if you can set your orders in to take limit orders around these areas, then you can do it automatically. Okay, and what I want to do now is, you see how we've broken through these areas here. We've got this area here as protection. Let's just go to the hourly chart. We've got this block. You see our prices actually come back and retested that area. Close below, comes back, retest. Now we're into this area of support. So I want to get the stop to break even on this, and hopefully this area will hold, and we can shoot for these area, or this area of support here in this trend line. Okay, so we just shift this to break even. I want to compress this. Just follow price along. Okay, so price is still moving down nicely. That's what we want to see. Hourly chart here. Let's just have a look at that 4 hour. I don't know if we've got a candle close yet, but just zoom this right up here. Okay, so it's coming off this area. See, it just taps the highs, moving into this little block here. This could be a problematic area as well. Well, we've got some profits off, so that's okay. We'll just manage it as we go. We've got currently up 30 pips. Now we've got, you see this area, I'm just going to adjust it slightly. You see the close comes back, retest it as resistance. then it closes below this level, comes back, retest resistance. Okay, so these are all areas now that we want to see. I'm just looking at these micro levels, areas that we want to see price hold if we spike back up here. Okay, so price is sort of coming to this little area here. I want to see it come down here before we can get the rest of that position off. We've broken through this area here, holding slightly. Okay, so now we're getting a swing high here. Because this is a 5-minute pattern, I want to reduce some risk on this. I don't like to be too aggressive on these very, very small patterns. Okay, so we've closed below that level. What I want to do is I want to move the stop to just above this high here. Okay, so we've got this area to protect us. Resistance here, look to flip back and hold as a resistance level again, as well as you see this block here. Okay, so if we put a stop above here, hopefully if price comes back and spikes the level, we can have a run down here. Okay, so this is that hourly level here, so stop above, let's say 65. Okay, so we've got this area to protect us, this swing high, and we got this hourly block right here. So modify this. No, 65, we'll lock a few pips in there. You can also use your Fibonacci levels to move your stop below. I personally don't like to use that too much. I rather use these dealing levels. Okay, they're far more accurate. We just see the spike down, picking up more orders. So really looking for a spike lower here. I'm going to put a take profit right at this area, 1 at 830, 1 at 830 plus the spread 3. Okay, so we're almost at that take profit, showing signs of rejection here. Still not popping lower. We're starting to release to the upside a little bit. Okay, see how we have this little price flip here. If you understand the flows, you can actually trade these for little scalps. You see how we have this base. Okay, this is the essence of a base trade, except I'd want to set a very key area of support before I looked at considering trading this. See the commitment above on the 5-minute, closes above, comes back, retests it. Okay, showing signs of rejection here. Still okay with this trade. Let's just have a look at the hourly chart. So you see how we've had 2 closes down. We've come into a little area of support. It's very, very choppy here. I'm still looking at this trend line as a final target. I'm spiking up now. We want to see this area now hold. Okay, so now we're starting to hold. Let me just compress this. We're starting. You see this resistance area we marked off. Okay, so I now there's a little rejection off here. 14. I want to put my stop down. I wonder if it can 60. It's about the same when we add the spread in. Okay, it's about the same in terms of putting your stop. The high is here at 60. We've got it at 65. So we're giving literally, 2 pips. 2 pips above this high plus the spread. So we really want to see a run down, taking these lows, but we've obviously got to clear this base right here. Okay, so there's a spike up. Price obviously didn't move lower there, and I'll just step this forward here. Prices now had a rally back up towards those highs. Okay, so if we have a look at the account history, we got 22 pips on our first part of the position, and then we got stopped at plus 11 on the second part of the position with a spike up. Okay, remember, if we just have a look at the overall market environment once again, let me just clear all this off. Okay, we are in a big uptrend on the 4-hour, big one on the daily chart, high highs, high lows. We've started to pressure this level quite a bit. We popped up, had that false break. that was the fill on the butterfly pattern, and you can see now we've come right back up again. The only thing I don't like about this, as I said, was these high highs, high lows, and the pressure that's putting on this level. Okay, it's more likely in the longer term to break, but you know, if you just understand the environment, we can still take these sort of trades. And I'm just going to show you what happened from there. Price actually started to move up. So here comes back, test that block, retag, trend line, and oh, there we go. That was the bearish butterfly on the 5-minute chart.